December 3rd, y'all. It is officially December. We're in our full sprint to the end of the year, the holidays around the corner, and 2026, in my personal opinion, has never looked better. Okay. Today's video, today's live, today's conversation that we're going to have together is all going to be around the upcoming and anticipated next Federal Reserve meeting, which is next Wednesday, December 10th. And we have, as of right now, presently today, according to the CME Watch tool, we have an 89% chance of another 25 basis points Fed rate cut. So today's video is going to be all about that. We're going to talk about the upcoming Fed rate cut. What, in fact, does it mean for current home buyers, future home buyers, current home owners, even sellers and people listing their property currently, presently in the market right now? What happens to the market when rates continue to decrease, which is obviously a very good thing. Now, just full disclosure and reminder, guys, the short term Fed funds rate, that when the Federal Reserve is reducing their interest rate, again, remember that is the short term Fed funds rate. That is not directly correlated to our mortgage interest rates. However, they do tend to follow each other. So as one comes down, the other will follow. Now, in a very interesting, and we're kind of like jumping right into it here, guys, but in a very interesting dynamic where the um, Federal Reserve decreases the short term Fed funds rate. Many of the times, I think over the last 6 Fed meetings where we've had a rate decrease, we've actually seen mortgage interest rates increase over the coming week after. Why? We don't know. It's just been kind of the norm anytime we see a Fed. Actually, I take that back. We do know. Okay. So the Fed decreases the rate. Okay. That's fantastic. We see a decrease of the short term Fed funds rate. You would believe that the mortgage interest rate would follow. Again, not directly correlated, but they should follow closely. Now, what moves the market and what is the driving factor in mortgage interest rates that the Federal Reserve controls is the press conference immediately after that announcement of either cutting or not cutting the rate. Okay. If any of you guys are a super finance nerd like myself and you watch the press conference with Jerome Powell, the Fed speaker, after the announcement to either cut or not, it's those words, those specific, excuse me, actual words that he speaks when it comes to forward looking guidance and what will the future hold for the financial markets. That is a direct driver for mortgage interest rates. Okay. If it's positive and dovish, if it's all good, future rate cuts coming, inflation coming down, all is good, then the bond market and the treasury yield will cool down a little bit. Okay. Which will improve mortgage interest rates. But over this last, like I said, like 5 or 6 meetings, there's been some hawkish or not so great forward looking guidance on will the next Fed rate cut be, uh, you know, a thing, right? This last press conference that we had, which is what made mortgage interest rates quite volatile this last few weeks, was the verbiage that was used in the press conference after. So, very important. Just kind of keep an eye. I mean, you don't have to keep an eye on it. That's what people like me are for. But make sure that you're working with a mortgage partner or lender, someone that understands these dynamics, some of these nuances to the financial markets, how they move, because it can mean thousands and thousands and thousands of dollars of difference if you're buying a house and locking a rate in a certain market, or you decide to wait and lock, or you already locked because you were looking forward to some of this guidance that was anticipated. So, just a big pro tip there. Also, too, before I forget, if you guys are here and you're wondering why I have a mustache right now, which my wife is not super happy about. Okay, it is just something that we're doing new for December. Okay, normally, especially this last couple years, I've been Mr. Clean Shaven and Mr. Dapper, GQ, all that fun stuff. But I wanted to feel a little bit more dangerous here for the for the end of the year, and bring 2025 to a close. And I know that when we see my niece and nephews for the holiday season for Christmas, they're going to get a good laugh out of it. So we'll see if I keep it. We'll see how long I can keep the mustache going, y'all. But anyways, okay. So Federal Reserve rate cut coming potentially here on Wednesday, December 10th. Okay. Got an 89% chance of that. That would be fantastic if it happens. Again, we don't necessarily care too much directly about the current Fed rate cut because a lot of that stuff is already going to be baked into your current present day mortgage interest rate pricing. So just know that. Again, remember, time and time again, I keep trying to educate you guys and having you understand that in the finance side of things in real estate, right? The mortgage lenders, the banks, we're always going to have this forward looking guidance and we're going to be weeks, if not months ahead of that news. Okay. So if things are trending in a positive direction, mortgage interest rates will reflect positively. If they're not trending in the right direction, or if there's some upcoming world, global, whatever news happening, you're going to see mortgage interest rates start to deteriorate. Okay. So, again, super important to kind of keep top of mind. And of course, that's what we're here for to do. Okay. We're going to keep you guys very informed and educated at all times because remember, of course, who you partner with matters. So what else? Before we dig any deeper into the Federal Reserve, so markets right now they're moving here in Southern Nevada and Las Vegas, Henderson, surrounding areas. They're actually picking up quite a bit of steam. Okay, we've had a relatively quiet market otherwise for the last. I want to say probably 60 days. It's the holiday season. It's very common for the market itself to cool down a bit during the holiday season because, again, families are going on vacations. You have Halloween, then you have Thanksgiving, then you have Christmas. There's back to back to back just family things happening. Most of the time, if the property is not already listed, people aren't just throwing their house on the market. And home buyers, if they're not already shopping for a house, they're not generally jumping into the market. However, I encourage you. Okay. First of all, obviously, none of this matters if you're not ready to buy. So make sure that you're working with a local mortgage expert in your community, in your area, because remember, like we talked about last week, all real estate is local. You want to work with your experts in your local community. But none of this matters until you are ready. So work with a local mortgage expert that can have you prepared, have you ready, having you understand the buying process and the different strategies to deploy for your exact situation. And most importantly, especially if you're a first time homebuyer, you want to make sure that you guys discuss your income, your employment, your assets, your credit, and your debt. Okay, incredibly important. That would be essentially kind of all of the pillars of your official pre approval that would get you and send you out into the market in 100% confidence, just looking for the house. Now, in the present market right now, again, all of our clients, we currently have 4 deals presently in escrow. Last month was a little bit quiet. The month prior to that, we had funded about 10 first time homebuyers. So it's been great. Knock on wood, putting in that work. Let's go and get it. Okay. But our first time homebuyers, when they get out in the market, are 1,000,000% prepared to do battle. What does that mean? Okay. We've already done all of the work that they need to get out there and shop in confidence. Most importantly, submit an offer in confidence that we can then speak to the strength of their pre approval, their qualifying ability, and their ability to close to that seller and that seller's agent, that listing agent. Okay. So, very impactful because when we do that and when we have all of those T's crossed, I's dotted, our buyers, whether they're first time home buyers or repeat buyers, can go out there and negotiate things like seller paid closing costs in confidence, favorable due diligence periods. They can get their realtor's commission paid for by the seller, things like that. Okay. When you're not well prepared and you don't have these strategies in place and you start submitting offers without some of these things being requested, okay, and you can't support evidence of why you should get them, okay, it's not going to work out super well. And when you're talking about buying in a higher rate environment, which again, historically on average, that's not the case, but certainly higher over this last few years than it was in 2020 and 21. So we want to do so with absolute expert strategy. Make sure you work with experts. Okay. Those of us that are in the streets doing it each and every single day, we will have you set up for success. So, very, very important, guys. Again, just reminder who you partner with matters. I'm going to say it over and over and over and over again because it is truly a thing. Okay. I work with some of the very best realtors here in town. And that's not because of, okay, they've have a humongous team with 100 people that work for them and everyone's just running around with like chicken head. No, I'm talking about expert agents and their ability to communicate. Okay. Their ability to build relationships, their ability to deliver on promises, do what you say you do. Okay. Super important, right? Their partnerships that they have with other local experts here in the community. When you get your home inspected, when you go to the title company, when you have so on and so forth. It's the local experts that will be a game changer for you, especially as a first time home buyer. Okay. We want your experience to be top notch the entire way through. Okay. And yes, on our end, on the mortgage and of course lending side, we're looking to deliver an experience that is not just fun, you know what I mean? Pleasant. Everything went well, which that's our goal, right? But it's also super important that you're getting the best financial opportunity possible to you. Okay. That's what we specialize in. That's what I'm an expert in. And that's what we'll help deploy for you. Um, but yeah, the present market kind of, right now could be busier, could always be busier for sure. But my clients that are in the market right now, they're just capturing some of the best opportunities that we've seen in the last few years, like just bar none. So between the seller credit, between those negotiable due diligence periods, things like that. When I have a first time home buyer that's out to get it, that's able to get out into the market right now, they can, we can tell the seller that they're going to close in 20 days, but we want X, Y, Z, and they're able to capture that. It just puts a smile on everybody's face. So get out there and start shopping, y'all. Now, how do we prepare for 2026 ahead of, again, what could possibly be another Fed rate cut? And what's the game plan for 2026? What is kind of the general forecast moving forward? So I actually had this conversation with one of my refinance clients last night. We hopped on a Zoom together about 6:30 o'clock last night with her and her spouse. This is actually a referred client from another first-time homebuyer of mine. That this is his brother that he had referred over to us. We also help their parents. So it's a whole family thing, right? We hop on the Zoom call with them and we're doing a deep dive into their present qualifying scenario, understanding, obviously what they're presently paying, what their payment is, the whole dynamics of what the mortgage refinance is. But most importantly, what are the exact pain points and goals that we're looking to achieve? Okay. Many of the times when we're talking about just specifically a rate and term refinance, when we're just refinancing the interest rate to lower the payment to make more affordability happen for them, obviously it's hyper focused on those exact things, the rate, the price, the things like that. So I'll get back to that in just a second. But before that, okay, you always want to make sure this is a conversation that I have with all of my clients. Uh, Most importantly, my refinance clients, because that's what generally once you own the home is when you can start doing things like paying off debt, depending on the amount of equity that you have in the property, et cetera. Okay. Because you'll never, if you have a sufficient amount of equity in your property to leverage that equity and pay off high interest consumer debt. So, for example, if you have a conventional or FHA loan, you need at least a 20% equity position or more, meaning you either put down 20% or you've been in that property for a few years and your home's appreciated to that point, right? You can then start using that excess equity to pay off high interest credit card debt, other consumer debt, car loans, whatever. Okay. On a VA home loan, you can go up to 100% loan to value. So you actually don't need any appreciation in the property, although clearly we would like that to be the case if possible. But on a VA home loan, you can go up to 100%. Okay. Now, why using the equity in your home, okay, is hugely beneficial when you're talking about understanding household affordability is because let's say, for example, this is just one example. Okay. Let's say you have a $10,000 credit card that has a minimum $350 a month payment. Pretty average for what I would say a $10,000 credit balance would be, unless you had maybe like a zero interest or something like that, right? Where that credit card has a 20% plus interest rate. It's a pretty high monthly payment. And if, when you're talking about equity in a property, right? Because when you are a homeowner, you're talking about hundreds of thousands of dollars. Okay. That property, because it's such a large number, right? A bank, a lender, somebody let you borrow hundreds of thousands of dollars with what would be your lowest interest rates available in present market, right? Whether that's 5%, 6%, 7%, whatever, that's lower than your credit cards. That's lower than your student loans. That's lower than, in most cases, your auto loans. You're getting to borrow the highest amount of dollars possible with the least amount of interest, okay? Super important to understand that concept. So if we can leverage what we would call a cash out refinance to pay off that other consumer debt, okay, that would otherwise then save you. If you paid off a $10,000 credit card and you no longer have a $350 monthly payment, one, that $350 a month liability is gone. Okay. That is a game changer. You have to drop an interest rate by more than 1.5%, possibly two, on your average $350,000 or $400,000 house to save that amount of money per month, which would be a humongous drop. Okay. Not generally reasonable in present day market. Okay. So instead of waiting to do that, you would pay the credit card off. Okay. Eliminate the debt, eliminate the balance, which then will increase your credit substantially and give you that breathing room that you need. Okay. That's one of the reasons why we're always explaining to our clients what are some of the most beneficial ways to use the money available to you. Okay. If you, let's say, for example, you came to me as a home buyer. Okay. You're like, hey, Mario, I want to put 20% down on my house. Okay. Fantastic. That sounds like a great idea. But let's have a conversation around your total asset situation. How much money in total do you have saved? Do you have an emergency fund? Do you have a retirement fund? And then, lastly, but most importantly, what does your debt scenario look like? Okay. Because for those clients, most of the time when you're putting 20% down, they're in their head. One, either someone told them they had to put 20% down to buy a house, which, as you guys know, is not the case. Okay. Especially for first time home buyers, where if you have not owned real property in the last 36 months on a conventional loan, you can put down as little as 3%. Okay. On an FHA loan, you can put down as little as 3.5%. You do not even have to be a first time home buyer on an FHA loan. Don't let people confuse you. The only requirement is that you're buying your primary residence. Okay. That's defined as you're going to be living in that property as your primary residence and occupy it within 60 days of closing. Very important. Okay. But a lot of times I have, conversations with people where they don't even know that you don't have to put 20% down. And if they do know that you don't have to put 20% down, but if they don't, they're going to have PMI, they think the actual amount of money, okay, the PMI amount is hundreds and hundreds or thousands of dollars. Okay. So, just real quick, and this is again very specific to the qualifying FICO score that you would have as a qualifier on an FHA loan. Okay, let's say, for example, you're putting 3.5% down. It's a constant. It's always the same 0.55%, of course, of your base loan amount is going to be your PMI factor. Okay, always the same. So again, just to give you kind of an idea of on a $400,000 house, your PMI is going to be somewhere in the range of, I don't know, like $180 or so a month. Okay, something in that range. On a conventional loan, especially if you're putting more down. So let's say, for example, instead of 20% down on that conventional first time home buyer, whatever, we put 15 or 10% down. Okay, because if you're talking about a $400,000 house, 20% down would be $80,000. If instead you used half of that for your down payment, so you have 10% down, okay, you had another $40,000. And let's say, for example, you had a bunch of consumer debt, cars, credit cards, whatever, paying off the consumer debt, okay, eliminating those monthly liabilities is far more beneficial to you financially, credit wise, and just peace of mind, okay, versus putting the additional 10% down to not have PMI in a loan where you otherwise would have a lower PMI factor, okay. So just kind of like a hyper pro tip there where, this is, and again, this is not a cookie cutter one for everyone type of scenario. This is specific to working with someone that does what I do for a living. Hopefully you're working with the owner of a mortgage company. That would be fantastic because you have as much control and flexibility as possible. But somebody that does what I do for a living that is an expert, okay, at understanding the nuance of personal finance. Okay. People don't come to me with an application just to spit out an answer, a yes or no. Okay. People come to me to get an expert opinion and go through the mortgage and loan process as smooth, as quick, as fast, as efficient, knowing that they're getting the best financial opportunity available to them. Okay. Incredibly different than, again, going to a bank, a depository, or to an online lender that is just going to treat you like an application. Okay. And believe it or not, I don't charge you more to do that. In many of the times, in many of the cases, I'm actually going to be the most cost efficient, effective option for you as well. So I play a very unfair game, y'all. You know what I mean? I'm here to serve our community, and I really want to make sure that you are served appropriately. So, okay, back to upcoming Fed rate cuts. So let me just real quick share my screen here. I am going to, okay, mouse froze. Awesome. Share screen. Let's go right here. All right, perfect. So this is the CME watch tool. Okay, so this is going to show you that we, as of right now, presently December 3rd, 2025, at 12:20 p.m. Pacific, we have an 89% chance of another 25 basis point Fed rate cut. So super exciting. Ideally, that stays kind of in that range or higher as we approach closer to the meeting next Wednesday, but no guarantee that, of course, that's going to happen. Okay, we still have an 11% chance of there being no Fed rate cut next Wednesday. Okay, just remember, a federal rate cut does not directly affect mortgage interest rates. If you are in contract right now, if you are in escrow, okay, in escrow right now on a home that's going to be closing, let's say by the end of December, if the mortgage lender that you're working with obviously has presented to you a loan scenario or finances that makes sense, look good, and you're ready to rock with it, I would suggest, from an expert opinion, that you just, if you like it, you lock it. Okay. Be done with it, call it a day. One of the things on my end, as the owner of a mortgage brokerage where I work with many different lenders all across the country, many different wholesale lenders all across the country, is let's say, for example, we locked with one lender and we saw a drastic decrease in mortgage interest rates, we could move to another lender. Okay. If that particular lender did not agree to allow us to renegotiate or float down, we would move it to another mortgage lender. So it's the privilege of having access to many different wholesale lenders, our ability to do that. But most of the time, that's not the case. Most of the time, when you have these kind of like big announcements, things like that, interest rates will take up slightly. Again, like we were talking about, based on the conversation that's had at the press conference after, or something in the economy happens, or inflation spikes, or whatever. So, those of you that are in escrow or under contract, I would suggest you probably, like I said, if you like it, you lock it. Okay, just be done with it. But just a little pro tip there for me. We'll see what happens next Wednesday, December 10th, with the Federal Reserve meeting. Now, lastly, I just wanted to end with this, y'all. So, again, this is our now, I think, third or fourth consecutive live that we've been doing every single Wednesday, that we will continue to do in perpetuity. It is on my calendar, in my phone. It's going to be something I'm committing to every week. Here in 2026, the new year, we are very committed to continuing to serve our community both professionally. So, mortgage, real estate, all of the above. We've been doing it for over 30 years here in the community, and we will continue to push, fight, and do what we can do for you. But we are also making a huge push into the charitable foundations here in the community as well. Okay. My wife has done a phenomenal job. We've kind of started this for the holiday season, our first, what we're doing, pajama drive for foster kids, which is really cool. One of our real estate partners, Miss Patricia Kennedy with The Real Broker, and my wife, they're kind of the masterminds behind the pajama drive, like I said, for foster kids here in town. We have, I want to say, like 20 local businesses that have participated in the drive. It ends on Saturday, December 6th. And if you have any pajamas, they have to be new, obviously, that you'd like to donate to the foster kids here in our community, I believe my wife said that when she got involved with this charity, they told her that there was somewhere in the range of about 3,000 kids in foster care here in Las Vegas and Henderson, Southern Nevada, which to me sounds just like an incredibly large number. Like that's a lot more than I thought. And, we're trying to bring some Christmas joy to as many of them as possible. So, my wife and Patty, I want to say, like throughout the businesses and our own donations and family, friends, and we've had relatives from all across the country donating, which is amazing. Thank you guys so much. We appreciate you. I want to say, and I don't want to jinx it, I don't know exactly, but we're getting close to, I think, like over 1,000 pajamas. So it's pretty neat, pretty amazing. And it's just another thing that we're going to continue to do through the new year and beyond. Not this exact charitable foundation, I don't believe, but other charitable foundations. Again, with me as someone born and raised here in the Las Vegas and Henderson community, and one of the reasons I'm still here and I haven't left and I don't worry or focus on being licensed in other states is I'm hyper focused on serving our community. Okay. And remember, guys, teamwork makes the dream work. Who you partner with matters. And do me a favor. If you're in the process of trying to buy a house or refinance, shoot me a DM. If you've seen this, go to the website, click that QR code, and let's have a chat. Let's have a conversation. Allow me the joy, okay, of helping you understand some of the nuances to how we help make you a homeowner, how we help you optimize household affordability through mortgage refinance in the new year. Let us help you. Okay. Remember, guys, who you partner with matters. I hope you guys have a wonderful Wednesday. We're going to see you guys next Wednesday, actually on the Fed rate cut this day. Again, December 10th, next Wednesday. We will hop on live and we will chat about, hopefully, crossing fingers, that upcoming rate